Hello, everyone. My name is Abby Goldstein, and this is session 8 assignment. And today we're tackling one of the most famous market anomalies of the modern era, which is the 2020 to 2021 GameStop short squeeze. Our assignment was to analyze this event using the driver framework to test the core assumptions of the efficient market hypothesis, or the EMH, and see if the market truly is rational. Before we proceed, the critical first step under verify was to check the stated fact that the GME traded at $0.04 in August 2020. So I'm going to run my code, and you can see that this box right here stated that this fact is incorrect. Based on our code verification using the split adjusted historical data, the lowest closing price for GME during August of 2020 was approximately $1.04, and this is 25 times the stated figure. Now, the define and review stages. The problem is pretty simple. How did a struggling video game retailer with a fundamental value estimated between $10 and $40 per share reach an astonishing price of nearly $483? This massive disconnect is the anomaly we are investigating. So the key facts laid out in our code respiratory output confirm the event's mechanics. The short interest, meaning the bets against the company, peaked at an extreme 140% of the public share float. This created the mechanical potential for the squeeze. Next, the price surge was driven by an unprecedented tenfold increase in retail trading volume, coordinated largely through platforms like Reddit, just stated right here. Oops. Now, for the investigation phase, we were to test the three forms of market efficiency. The GME short squeeze appears to violate at least two of these forms. So the weak form, EMH, this form states you can't profit from looking at past prices. The GME event challenges this because the extreme short interest arguably created a predictable target. If we assume the short percentage was the information, the market was arguably inefficient in the run-up to the squeeze. Now, the semi-strong form EMH, this form states that prices reflect all public information. This is the biggest failure point. The price peak of $483 far exceeded the analysis consensus of the $10 to $40 share price, showing the market was widely overrated to the public news of a potential company turnaround. Next was the strong form. This form states that even private information and market structure can't be exploited. The controversial trading restrictions imposed by brokers like Robinhood raise a profound question here. When retail investors were suddenly restricted from buying, it suggested unequal access to market execution, which is structural violation of strong efficiency. To explain the anomaly, we must look beyond traditional finance and into behavioral finance. The rational mechanism, the core short squeeze was rational. Mechanical function of the core short squeeze was a rational mechanical function of the high short interest. Short sellers were mathematically forced to buy back shares to limit losses, driving the price up. Next was the behavioral amplification. The sheer magnitude was driven by emotion. Our analysis points to three key behavioral biases. Herding, which is investors following the crowd on Reddit. Sentiment-driven trading, which was trades motivated by anti-Wall Street sentiment rather than profit. And then information cascade was people bought because other people were buying, creating a self-fulfilling price bubble. In conclusion, the GameStop event demonstrates that markets are complex. The GME short squeeze did not entirely disapprove the EMH, but it did expose the fragility of semi-strong and the strong forms in the EMH. Our recommendation is that the GME anomaly is best understood as a rational market mechanic, which is the short squeeze, amplified to an irrational extent by coordinated behavioral finance biases. This event proves that while markets may be efficient over long-term, short-term efficiencies driven by retail coordination and emotion can have a massive systematic impact. And this was my assignment. Thank you guys for watching.